one thing that drew me to Bitcoin, besides my innate interest in it, was there were no gatekeepers. There was no 40 years of experience. There was no any of that. It was just like show up, provide value, and if you can, things will probably work out well for you.
You're listening to Because of Bitcoin, a podcast that shares the personal stories of how Bitcoin is having a real impact in people's lives, including mine. I'm your host, Mauricio Di Bartolomeo, the co-founder and CSO of Ledn. And without further ado, let's get started with today's story. What's up, friends? Welcome back to Ledn's podcast, Because of Bitcoin. Hope you had a great summer, and boy, do we have an amazing lineup for you this season. Unless you were living under a rock this summer, you probably heard about MicroStrategy and the popularization of Bitcoin Treasury companies. These are publicly listed companies using public capital markets to raise money and buy Bitcoin for their treasuries. This trend was so powerful and popular that the Bitcoin community endearingly dubbed summer of 2025 Paper Bitcoin Summer. And today I have none other than the man who coined the term himself, my good friend Steve Lubka, on the show to talk about Bitcoin treasury companies and Paper Bitcoin Summer. Steve was the head of private wealth at Swan Bitcoin and has recently made the move to become the vice president of investor relations at Nakamoto, which is a Bitcoin treasury company with a very unique and international approach that you will learn today on this show. Without further ado, here is my chat with Steve Lubka. Steve, how's it going, man?
It's good, brother. It's exciting. It's been an exciting, God, this whole year's been something, but some good times. We got the merger done. We got the Powell signaling the first rate cut today. So it's a good day.
It's a great day. And I'm going to start the show as I start every single interview, which is by asking you what it was like growing up in the Lubka household. And was money or finance a big topic at the dinner table?
Okay. So no, it wasn't. I've never been asked this before. It was not a big topic. In fact, it was not talked about very much. And not because it was like you don't talk about it, but I was raised by mainly my mother, and money was not one of the things that she figured out in her life. And there was a point even when I remember my introduction to it is, I think I was in college, and she handed me this book about index investing over time, of just the power of compounding. And even if you just save a little bit of money, it's worth a lot. And I remember reading that. And that was the first time I'd ever really thought about money in any sort of tangible way, or even investing or whatever. But it really caught my attention. I feel like that was the first moment in my life that it was this is something I need to understand. Even it is, I think the thing that most people don't grasp is that money and managing money is a different skill. It's a different pursuit than working. Those are two completely different things. I think a lot of people just assume if you work, you will have money. But those things are not. There are many people that make tremendous amounts of money and keep very little of it. There's people that make very moderate amounts of money that keep quite a lot of it. And I think reading that book was the first time that really became clear to me. And I remember thinking oh, this is something I'm going to need to spend time with. And it became an interest. But it was an interest for me, I think, in proportion to how little that was my upbringing.
That's really interesting. And I'm always really fascinated by people that grow up in, say, North America or Europe, where money has predominantly worked, but then they find their way into Bitcoin early, and many times earlier than people that grew up in places where money fully broke. I have friends from Venezuela that witnessed the same hyperinflation than I did that they still don't get it, right? Whereas there's so many North Americans that get it. And what you're mentioning about work, making money and keeping money being two separate things, I think that yes, some of that is related to management and habits, but the other one too is I think the sort of nefarious dynamics of the fiat system, which is it forces you to have two jobs. It forces you to earn the money, and then it forces you to work to keep the money. And very quickly you realize that the second part is actually way more meaningful implications for your long-term financial future than actually getting the money. Getting the money turns out to be actually relatively commoditized and simple. And you can make it can have a big impact if you just don't invest it properly.
Like a staggering impact. You could make 400 grand a year and you could save 30% of your income, right? So like post-tax, I'll call it whatever it is. Say you save $100,000 a year. If you never invested that money ever at all, you'd be shocked at after 40 years what you're actually left with. And that's assuming a savings rate that is far beyond the average person. But if you actually don't invest that money at all and you just keep it in cash in a bank and it loses whatever percent a year, you do not get ahead, even as a high earner saving a ton of money. And consequently, if you save $10,000 a year or $20,000 a year, and you invest that in the right assets, you'll be amazed at how much further that goes. But it doesn't matter how much money you earn. It matters what you keep and what you invest.
100%. And on that vein, because you grew up in a fairly stable economy and there didn't seem to be too many sort of radical events. Well, maybe that is the question. The question is, even though you grew up in a stable monetary environment, what were the events, if any, in your life that prompted you to better understand money and property rights? Like, was there an event maybe in your extended family where you said the system's broken and therefore I want to learn more about how this works? Was it that book that your mom gave you? Was it something else?
So there's kind of two elements to it. One is there was a moment where I just realized that the amount of savings my mom had was not going to be enough for her to, even moderately retire. Like it was the money was going to run out, and I realized that the math doesn't math, and if I don't solve this, like it's not going to be good. It's not going to be a good situation. And so part of it was kind of the necessity of like, okay, there's some savings, but this needs to last for 20, 30 years. And it's just not going to unless a few factors happen. And so part of it was that necessity. Part of it was also, to be honest, like it was a kind of I always liked growing up. I really liked, call it in-game economies. So there were certain online video games where there was like an economy in the game that players would speculate on. And this always captivated me, like more than the game itself, of kind of arbitraging these different units. And I got really, really into that. And then when I started learning about investing, it was kind of like it hit the same sort of switch for me.
That's really interesting. What was the game? World of Warcraft?
Yeah, World of Warcraft. Yeah. I loved the auction house and like strategizing how you could do that.
I mean, there's so many paths to Bitcoin. There's never one straight line. And it's fascinating to hear how everyone got there. Just sticking around, this will be probably the last question around your upbringing, or your origin story. But you went to school for arts. You got an arts degree. And right after that, you seem to have started your own company in the Bitcoin space. That's a pretty big shift. And so how did you end up choosing art, and what made you make the switch? Like, was that when Bitcoin came into your life?
Well, liberal arts. So it just means like it was a general bachelor's. So I did like a little bit of everything, but still it was I did not come from an economics background or a computer science background. It was actually when I graduated, and it was around the same time that I was contemplating. It wasn't immediate. It was a few years after. I started a business with a friend immediately after school. But it was this moment in my life where I was in like my early 20s. Like I was 24, 25, and I was kind of thinking a lot about money, and I was contemplating it. I was thinking about my family. I was thinking about what was going to be necessary. And it was this thing where it's like, I need to figure this out. It was very much like, I think this is one of the key variables. It was a problem I needed to solve. It wasn't just like, oh, I need money, so I should go do X. It was very much like, I don't know the answer to this question. Like I don't know what the right way to I need to solve this. I need to figure out how am I going to position myself in such a way that I have money and that I have the money I need and so on. And it was something I kind of meditated on or thought about for several years. And one of the things I obviously got to in that process that we were just talking about is I realized really investing was a key part of it. So I started investing and I started just stocks and trying to educate myself and learn on that. And then a friend of mine introduced me to Bitcoin. So I had a friend from college and I told him what I was doing and what I was thinking about. He said, "You have to look into Bitcoin." And it was 2017, so it was also crypto. It was also all this stuff from that time. But it really hooked me. It really was like incredibly captivating for me. So then I ended up wanting to go a different direction than my friend. We did a small business together, and I thought, you know what? I want to figure out how to work in the Bitcoin industry. Like I want to. I mean, it was crypto a little bit, and then by 2018 it was Bitcoin, if I'm honest. But it was like this is where I want to be. I don't really know how to get there. I don't know what the path is. I didn't know anybody. I had no connections, and I didn't have anything related really. But I kind of just set that out as like this is what I want to do, and I did a lot of small things for a while. I worked as a consultant. There were some people locally to me that had businesses in the industry that I did end up working for some time. I helped a VC firm locally, navigated some institutions, but it was that 2017 era. It was that 2018 era where like the engagement that people had was different. It was a different kind of way of thinking of it. And so I did that for a while. I ended up starting a software development agency with two business partners. So we did custom software work and I ran that for a while. And we were able to do some Bitcoin work, some wallets, some things at that time. And that was pretty good. We kind of got to engage. I kept pushing them. Like we did a lot of general software dev, but I kept pushing them like, let's get work. Let's try to find work in the Bitcoin space. And we got some of that. And then during COVID, it was Clubhouse. Clubhouse had a moment where the lockdowns were happening and Bitcoin was coming back. And I remember being like euphoric in the office at the agency. And it was like we were over 10K. And I was like, it's 10K. We are so back. We haven't been over 10K in years. Like, let's go. And I started going on Clubhouse and just kind of running Bitcoin rooms and answering questions like in all my spare time. And so I ended up meeting the Swan team and I met Corey and started working there eventually. But it was very much my path into the industry was much more like, this is just where I want to go and I'm gonna find a way to get there.
Yeah, you willed it into existence. You spent 5 years at Swan, and those were, I think, some of the 5 most defining years of Bitcoin, period, like full stop.
Yeah.
And I think you had a pretty interesting position there. Several, actually. You basically went up the ranks. What were your biggest lessons from your time at Swan? And this could be from a Bitcoin perspective, client perspective, operator's perspective.
I started, built, and ran the private wealth team. And so I think even the core insight that led to that is in part the answer to your question and is one of the biggest takeaways because it was something that we kind of doubled down on again and again. And it's that the average person needs there's a relational element. They need help in understanding Bitcoin. The most people are just not going to do it themselves. They're not going to sit down. They're not going to educate themselves. They're not going to set everything up for themselves. They're going to rely either on a professional, so part of the service we provided, or a friend or a family member. But they want that hand holding. They need that hand holding, and that the temperament and personality of most people is such that they really value that. And the other thing we learned is that there really was a tremendous amount of interest and demand from baby boomers, from people that are a little older. It's not that they weren't interested in Bitcoin, it's that they didn't know how to approach it. They didn't know how to get involved in it. And so they really, in many ways, were looking for a traditional private wealth experience with a rep, with a banker, with an advisor, and it wasn't out there. And the existing companies at the time had so targeted the sort of tech savvy 20 something, do it all yourself demographic that's just going to boot up a Coinbase account and set up their wallet and put in a limit order. And like, yeah, that was the early cohort of Bitcoin, but that is not the landscape of adoption. And so I think a lot of what I learned it's influenced my thinking today, and it probably ties into this later conversation we'll have on treasury companies. But just like the profile of the early adopter Bitcoiner, I think a lot of those people are already here. The people that come next are a different type of person that is looking for a different type of product. It's not that Bitcoin doesn't appeal to them. It's that they just don't, they're not the same profile as the guys that were early to this, that are on Twitter and so on. And the market and the industry needs to understand who that next wave of adoption really is and what they want and the things they value. And that's without even going into treasury companies. It should be clearly evident by the success of the ETFs, some $90 billion. People wanted a vehicle like that. And so a lot of what I learned is really expanding the view of where is the demand for Bitcoin, who wants to own it, who wants to have it, and that Twitter is not a representative sample. And even the users of these like exchanges are not a representative sample. So that's something.
No, it's funny actually. I completely agree with you in many things that you said. Number one is this on this appreciation or value of a private wealth sort of banker slash you represent relationship manager. So we actually just relaunched a private wealth offering at Ledin because we find that a lot of the clients, especially in the higher ticket sizes, have very unique needs. A lot of them want to be held by the hand, and it's funny because some do and some don't. Right? When you have the option, you have a wide net. You can help everybody, and those who don't need it can just go through the routes. But when you don't have it, you can exclude a lot of people that otherwise could have been your clients or wanted that from you, but you just weren't in a position to offer it. So I completely hear you on that one. And man, many more. But on the point of Bitcoin treasury companies and on the clear demand that there's been for publicly traded vehicles like ETFs, like treasury companies, I want to switch gears to that now because you are in the eye of the hurricane as far as this trend, because you now are with Nakamoto, which I think is the most exciting treasury company out there. I guess the question before we get into like Nakamoto and everything that you guys are doing differently, what about this Bitcoin treasury company wave or trend excites you the most?
And this is going to sound like almost a cheap answer, but I'll explain it. It's new. And I don't mean new for its own sake, but I mean that this is the next wave. For those of us that have been in Bitcoin for a while, it's exciting to get sort of a touch point with the next way this is developing, or what is the next stage in adoption. And I think things are always the most interesting on the frontier. That was what drew me to Bitcoin. A part of what drew me to Bitcoin is I recognized there wasn't going to be a lot of gatekeeping. I was young. I did not have a traditional background. I didn't have a PhD or a master's or a finance degree or whatever. And I recognized that I didn't want to do further school. It wasn't that I did very well in university, but I didn't see the risk to return wasn't there. I didn't think it made sense. And so one thing that drew me to Bitcoin, besides my innate interest in it, was there were no gatekeepers. There was no 40 years of experience. There was no any of that. It was just like show up, provide value, and if you can, things will probably work out well for you. And that was the case. So anyways, things are interesting on the frontiers. And that's what I see in this is I see an evolution in kind of the next step of Bitcoin. And that's not me saying that treasury companies are like defining what Bitcoin is and it's just going to all be treasury companies or anything like that. But it is exciting. It is interesting. Make contact with the next wave. I did an episode yesterday with Danny with What Bitcoin Did, actually with American Hodl. It was very good. I think we podcasted through the bottom, which was nice. Tal decided to step in today. So it is something that is emerging and is representative of, I think, this new development in the industry. And that's just structurally interesting. And it represents, I think, fully leveraging public markets, like really taking advantage of the financial tools and offerings that exist in public markets to acquire Bitcoin and to drive this forward. And that's compelling to me. And I also think it's the largest integration with finance that we've seen. I think in the most positive sense, treasury companies are asking and answering the question of what does it look like to integrate Bitcoin into public securities markets? And that's an exciting question. That's a cool question.
100%. And this wasn't a question I had originally planned out, but since we're on it, I think you're in a you're one of the better positions than anyone to answer the question, because some people might have this question mark on their minds, which is, what are the differences for an investor's perspective between an ETF and a Bitcoin treasury company?
Yeah, so they're quite different, right? An ETF is just you basically exposure to Bitcoin, the asset, and so it's just kind of a securitized way to track Bitcoin performance. The treasury company is a bet on an operating business, but the express goal of that business is to acquire Bitcoin basically as fast as you can, acquire as much Bitcoin as possible and at the cheapest cost of capital possible. And that's kind of the cool thing, is you get to go to financial markets and you get to kind of like a miner, actually. So miners arbitrage cheap energy to buy Bitcoin. They're saying, oh, I can get some cheaper energy over here, and I'm going to use that to effectively purchase Bitcoin. Treasury companies arbitrage cheap fiat. They find low costs of capital and they use that to buy Bitcoin. And I think finance has always been inherently interesting to me, and I think it's exciting to see how this integrates. And I think that excitement is mirrored by, I talk to a lot of investment banks, I talk to a lot of analysts as part of my role today. They like treasury companies more than they liked Bitcoin. Like, it makes more sense to them. And I think the key reason there is that it has a growth rate, it has a balance sheet, you can model it. Bitcoin's hard to model, it's hard to value. There's no cash flow, there's no future, there's no growth, like in that sense. So it's always been perplexing. And then you could also add that it wasn't easy for these people to actually participate in Bitcoin. Like, even if they liked it, they couldn't put on a position. And so I think treasury companies sit at the intersection of, like, they are more similar to what most people in finance are used to. They are modelable and they are equities. So if you want to buy them, you can buy them.
No, I think that's a great explanation. And I really like how you weaved in this idea of arbitraging cheap fiat, because I think that's exactly it, right? Like, you're trying to get the best terms ever. Like, Michael was able to issue convertible bonds at 0% coupon because he was able to use the volatility of his underlying, and that 0% money was used to buy Bitcoin to the benefit of all shareholders. And it's a really interesting strategy, if you would, that of obtaining cheap fiat that's getting debased to the tune of 8.5% year over year to buy an asset that's growing at a compound rate of 50% plus. So it just makes complete sense. Now, sticking with treasury companies, there's obviously been a bit of a Cambrian explosion around treasury companies, and we're seeing some of them pop up in different markets. You, I believe, like as I mentioned, you're in one of the most exciting ones, which is David Bailey, Nakamoto. And I would like for you to explain or articulate, if you can, what is the vision for Nakamoto and how does it differ from some of the other treasury companies out there?
Yeah, so I think there's two main differentiations. One is that we plan to continue to execute what was an incredibly successful strategy, which was the UTXO investment strategy. So UTXO is a fund that was managed by Tyler Evans and David that you can verify these numbers is the single best performing hedge fund in the world over a 6-year time frame, a 5-year time frame, a 4-year time frame, maybe a 3-year, and 99th percentile on 1 and 2. One of, if not the best performing fund in the world. And what they did is they backed first mover treasury companies internationally. Metaplanet was UTXO, Smarter Web, Blockchain Group, and many others. And they saw this opportunity to bring the treasury strategy to international capital markets where capital is constrained, where capital has restrictions on where it can invest and how it invests and how it's taxed and so on. And these companies were extremely successful, and they proved the point that you could follow Saylor. It wasn't a one shot. It wasn't a unique. Not to say there's not a lot unique about MicroStrategy and Saylor, but that there was room for more than one in the world. And so Nakamoto plans to build on top of that strategy and invest and take our balance sheet, take the Bitcoin on our balance sheet, and actually spin up first mover treasury companies in international markets. And so that's one of the key differentiations. A lot of people know that. The other thing that we've been talking about more is that we plan to synergize with operating businesses. So the Nakamoto team is a team of Bitcoin operators. These are people that have worked inside Bitcoin businesses in the industry for a very long time across many verticals. And our view is that at the end of the day, right now, you're in kind of a land rush phase where there's just like a race to buy Bitcoin. And that makes sense because it's hard to take your capital and outperform Bitcoin. You could say, hey, I'm going to take $10 million and I'm going to try to spin up this product or this service or whatever. Are you going to outperform the growth rate of Bitcoin with that? So it's a high bar. So it makes sense to just take the money and buy Bitcoin right now. And there's a race to do so as other people realize that. But we believe that the end state for this is the companies that win are the companies that get a lot of Bitcoin and then transition to a state where they're able to generate a return stream using that Bitcoin in some way. So that could be synergizing with operating businesses, or it could be something else. But we plan to really, so Bitcoin Inc. is the biggest media company in Bitcoin. There's a ton of opportunity and synergy there, and obviously looking at other opportunities. But we are interested in, hey, how do we leverage this market position, whether it's our treasury or it's a network of treasury companies that we are backers of, to actually drive growth and ideally like Bitcoin denominated growth, where as Bitcoin grows, those cash flows also grow. So I think it's a little bit more of an expansive vision, and that's not a criticism in any way of strategy. He took a very big and a very specific bet, which was necessary as the first mover. But I think we're looking to take a slightly different approach that we think is well suited for our profile and who we are and the people that are involved.
No, that's super, super helpful. And I think it'll help a lot of people try to make sense of, understand how you guys, because the way you've explained it, and I've had some context, I'm really deep into this industry, but maybe perhaps people listening don't have the same context. And I've always thought about, David's been very loud from day one. I had him, he was my first episode actually on last year's pod. So there we go. Here you are. He was also banging the drum around Metaplanet and all these other first movers in the early days. And just seeing Nakamoto become a bit of an extension of that vision makes a lot of sense. I think of it as almost a meta play on Bitcoin treasury companies outside the US. It's a way of effectively playing this global phenomenon in other markets, right? And seeing what happened with Metaplanet, you can hopefully replicate that in many other markets. And that makes a lot of sense. Sticking on that topic, you guys, and I say you guys, Nakamoto just completed, I believe, their first large-scale purchase, 5,753 Bitcoin, deploying almost $700 million. What did that feel like?
It was It was very cool. It was very exciting seeing that number tick up and getting the updates on how much of the purchase had been completed. That was fun. It was also firsthand experience at that this is a liquid market. And so for people that run around Twitter with all these doubts and theories and so on, let me be very clear. It is a liquid market. You can deploy a meaningful amount of size without materially moving the price. And that is something that if you have some size to deploy, you can verify for yourself. But it is a liquid market. It is a very robust global market, and it is very exciting to see those buys happen and buy a nice chunk of Bitcoin. Many more to come.
No, I'm going to ask you a little bit more on that experience in a second. But I had a similar realization as you did in terms of the liquidity of the space when I think this was one of our first sort of big down cycles where we had to do liquidations that led in on March 14th, 2020. And it was like, it was like 2 a.m. on a Sunday and the engine was running liquidations. And I just kept seeing the tickers hit and it just got fulfilled immediately at the darkest hour over the weekend with the markets in the red. And that when I walked out of that and I said, we were able to close out every single loan perfectly. And so you start understanding the quality of the collateral in the times when you need it the most, and just how powerful this and deep this thing is, and how many people are actually participating in size. What are some? I mean, if you could share just to try to help people guide some of their decisions or how they're assessing the space. Are there any red flags or risks within Bitcoin Treasury companies that you think investors should be watching out for, or things that should be paying attention to as they're sifting through these headlines and seeing these things pop up?
Yeah, so let's be really clear. Bitcoin Treasury companies are not the same thing as buying Bitcoin whatsoever. And my goal in speaking, coming on podcast, it's never to convince you to go all in Bitcoin Treasury companies or even to buy them. It's not the same as Bitcoin. You should understand that. It's a different risk profile. Bitcoin has no counterparty. There's no operators. It's not an individual entity. It is the largest, most decentralized computer network in the world with a bearer asset. And so one should never try to compare these two things. An investment into a Bitcoin Treasury company is an investment into a team of human beings, a team of operators, and human beings make mistakes. And so when you see 100 of these things or 1,000 of these things spin up, certainly the view is not going to be that, yes, like none of these human teams are going to make mistakes. None of them are going to get over levered or whatever, right? That can't be the thing. So it very much is a bet on a team of operators. It's a bet on a thesis. It's a bet on execution of that thesis and so on. Now, the upside is obviously that like these companies have shown that they can, when things go well, they can do a lot better than Bitcoin, but also they have the capacity to underperform if things don't go well. So it's higher volatility, kind of higher risk, higher reward. And it's quite interesting. But so I think compared to Bitcoin, like one should be selective and conservative on the exposure one's taking, as well as the teams that you want to back. I think for certain there will be many of these companies that don't succeed over the long run, right? Like this is just a simple, everything new and exciting and very successful goes through something like that in any industry, in any sector, everywhere. So keep that in mind, that I think a lot of the cultural and investment approaches that people brought to Bitcoin, there are differences here. And you should be aware of that. And like nobody that is as bullish as one might be on these companies. And I am a true bull and I am a true believer. It's like you need to keep those risks in mind and size everything appropriately.
Very well, the words of wisdom, because I think the same thing or a similar thing happened in exchanges. We had the rise of a bunch of exchanges. Mt. Gox collapsed. Then later on, Quadriga collapsed. Like we had like exchanges rose. Then there was a few big collapses that they got trimmed down and the good guys rose again. The same thing we saw with the lenders. We're a child of that. We were I think the only ones that made it through that first batch. Now we're getting a second batch, but there's this sort of growing and pruning process that seems to happen in any industry that's nascent. It does feel many times like we're living through what I like to call a movie, right? Like to me, this is truly living through historic times. Like these are some of the times or things that are events that people will be making movies about in the future. And I know you're big into content, and I know David is big into media. So my question is, are there any plans or anything that you can say or dreams of potentially documenting this moment in time? I would call the movie The Big Long, but that's just me. But no, I would love to hear, and again, you don't have to spill any beans, but this is such an important thing that's happening that I feel like we should be documenting this.
So we actually did record the purchase. So we did a documentary recording of buying the almost 700 million. And we haven't we don't have a firm decision on exactly what form that's going to take, but we did actually have this thought. We did record the actual process of making the buys, and we definitely are thinking of it in this way. And I think that's part of the fun of Nakamoto, and not just fun, but a unique advantage is the media angle. And we're Bitcoiners through and through, and obviously a lot of people with a big media background, and we're going to lean into that as part of the business. It's a differentiator, and it's this is historic. We're living through. I mean, Bitcoin is the most incredible story in the world, and Treasury companies are a part of the Bitcoin story. It's not the Treasury company story; it's the Bitcoin story. But I think the Treasury companies are going to play a role in that, and I think in some ways, they're the gas pedal. I could see them very much as the gas pedal. Treasury companies are the acceleration of Bitcoin adoption, because the honest truth is most capital in the world wants securities. They want to buy securities. I said this yesterday, but the largest sovereign wealth fund in the world just almost doubled their MicroStrategy position. Why do they own MicroStrategy and not the ETF? Well, because they want to invest in equities. That's just the reality. They want a lot of these pools of capital. They invest in companies. That's what they do. And so Treasury companies are opening up those pools of capital. That's in a very tangible way. They're doing something that you're just not going to get with the spot asset at this stage. Yeah, maybe the world changes over the next decade, but we're not there. And there's a moment in time where Treasury companies are profoundly filling a need that exists.
I would agree wholeheartedly. And I'm glad to hear that at least someone's thinking about documenting this moment in time. I think there's going to be a series of movies made, maybe a Silk Road movie, an exchange, the Quadriga movie or lending movie. And then there's going to be a Treasury company movie. And who knows, maybe there's going to be the sovereign adoption movie later on.
The Silk Road movie is going to be amazing now that it has a happy ending. You know what I mean?
Exactly.
It's perfect now.
There's so many stories. I mean, all of these stories, I think, so far have had a happy ending. Well, obviously, within context, some people have experienced pain, but all in all, it's made the industry stronger, better, and we are only going up and to the right, which to me is clear. I wanted to ask you a few sort of more personal, unrelated to necessarily Treasury company questions. And one of them is, I do speak to a lot of people all the time, in particular, actually, even some clients and friends that I meet that are really smart people. They're either early in their career, sometimes middle in their career, sometimes late in their careers. They just want out of their fiat life and they want to come into Bitcoin. And as someone who burst into the Bitcoin, you carved your own space in your own name in the Bitcoin space. Are there any words of wisdom that you would share to anyone that's in that situation right now?
Post more. You need to post more. I'm so serious. I am incredibly serious. And this may be a funny answer, but it is deadly serious. You need to get online and you need to post. You need to post on Twitter, on X. You need to make videos. Whatever you feel called to do, you need to write. But you need to wake up and you need to put something out there, because we live in this The salons are in cyberspace. That is the era we live in. In the 20s and so on, there were the Parisian salons. And this is where all the thinkers gathered and all the revolutionaries and everybody that was contemplating the big movements of that era of human history. And they were in Paris and they were in these salons and they were a hotbed of anyone that wanted to do something, to do things in the world. And in our era, the salons are in cyberspace. They're on Twitter specifically, in my opinion, on X. And engage, put something out there, like post your heart out. Get over the fear, get over the hesitation. It's okay to be wrong. It's okay to get something wrong. It's okay to make a mistake. It's not you'll learn and you'll toughen up and like people will criticize you, but you will meet so many people. The whole network of everyone you want to meet is right there. And that's how you reach them. And it's how you build a name for yourself. And it's how you build a profile. And you should go on podcasts and you should record a lot of podcasts. And people want this. They want this. Why are podcasts so successful? Because they enabled specialization of content. Prior to podcasts, the only media that existed was media that covered 60% of the bell curve, meaning if the show you're putting out there wasn't relatable to like 60% of everyone in the country, you couldn't put it out because it cost too much money, and television, it was the mainstream television. And so you couldn't do things that only 1% of people were interested in. Guess what? If 1% of humans on the planet are interested in something, that's like 70 million people. It's a ton of people. That's all you need. But you could never put that on television. You could never put that in the movie theater, right? Podcasts enabled us to specialize and drill down and make hyper-specific content that might only be appealing to 1% of people. Heck, 0.1% of people. But guess what? Those are the people you want to meet. And those are the people that want to hear what you have to say. And so it is the biggest force multiplier in the world is do something, think about something, go deep in something, and put your thoughts onto the big internet on a regular basis, and it will work at some point.
I love that. And it's very similar to what I tell people is just write, get out there, do content, and I think this is a pretty great segue into this because we're talking about podcasters and you and I are fellow partners of our alma mater, Vibes Capital Management.
Correct.
So I wanted to ask you if you could share, please, here, what is Vibes Capital Management?
Yeah. So Vibes Capital Management is a team of the best podcasters and posters and influencers in the business. And its primary goal is pretty much increasing accretively good times per share, where we're really trying to scale the good times that are being had and curate the vibes in the Bitcoin community to facilitate having a good time. Prior to Vibes Capital Management, I think the culture had gone a little sideways and we weren't having as good of a time as we could have. And we needed an improvement in the vibes. And that obviously led to Paper Bitcoin Summer. And what was Paper Bitcoin Summer? Well, it's saying, hey, there's this big thing happening. So instead of complaining about it, what if instead we had a really good time? And that resonated with people. They said, you know what? I would rather have a really good time than complain about something. And things went from there.
I love the efforts of our efforts, I would say, to restore the vibes and to keep the vibes high. I think it's very important, and I actually really do love the ethos of it because I think so much of your life is just having fun along the way and being able to take a lighthearted view on something that sometimes can be so serious. And I'm a proud member, and I just wanted to use this opportunity for people to learn a little bit more about what it is. I have another slightly...
Here's the thing real quick. When you have a conflict, when you have competing social factions, or you have two schools of thought or two ideologies, do you want to know which team wins? The team that wins is the team that is having a better time. And I'm serious. If you have two factions and one of them is miserable about everything, they're doomers about everything, everything's bad and a problem, And then you have another one that says like, actually, this is awesome. This is great. Here's what you can like about this. Which one of those like wins in the end? Which one of those has better aesthetics? Which one of those appeals to people? It's the faction that's having a good time. And so there was this moment in time with treasury companies and the growing rise of securitization. And the Bitcoin community had a choice. Like you could either be miserable about something that is inevitable and is going to happen, and you're just going to be miserable about it for a very long period of time, or you could have fun and you could recognize that this is inevitable. There's a large number of positive elements to it. Really, I mean, I obviously view it as like both inevitable and highly net positive. But even if you took a more skeptical stance and you weighted really highly that like anything that has people not do self-custody is like a problem, there's still a lot of positives here. There's still a lot of arguments you can make. But at the end of the day, you know, what all of this proved is that just like if you want to win, have a better time than your opponents. And so for anyone who disagrees with me or who disagrees with any of the discourses in Bitcoin, that's fine. I never know if I'm concretely right or we're all human. But if you want to win, have a better time. Go make the thing you're advocating for, make it more enjoyable, make the aesthetics better, have a better time. And if that's what you're going to do, then great. Like, then you've obviously found something that has a lot of positive traits if you were able to do that.
I completely agree with you, and reminds me very much of a line in a song from one of my favorite Venezuelan bands. And it's a line that says that at a party, that the song is about how to get the girl you like or how to talk to the girl you like. And the song goes, girls don't go for the fittest guy or the wealthiest guy or the best looking guy necessarily. People are attracted to those having the most fun. And I think that's just a law of general attraction. You want to have positive energy around you. And to your point about aesthetics, you want smiles. You want things that look beautiful, that look like they're fun, because nobody wants to be miserable. So I wholeheartedly agree. And that's why I'm actually such a big fan of not just Vibes Capital Management, but the people out there doing some more lighthearted content around Bitcoin, like Tatum, like Walker and Carla. I think that's very, very needed. Staying along that trend, you are also known for walking in the sun, 25,000 steps per day, and deadlifts. What does that all have to do with Bitcoin?
And so these are things I was very into before Bitcoin, but the thing I came to find in the Bitcoin world is like I didn't always post about those things. It was kind of a couple years into it that I started sharing more personally, basically. And at first I was nervous. I actually was nervous. I thought, oh man, all of these people followed me to hear about Bitcoin. If I start talking about something that's not Bitcoin, they're just going to be like, shut up, Steven. Like, that's not why I followed you. I really was. I was concerned about that. But I learned the opposite was true. And I started talking more about really a variety of topics beyond that. And people loved it because there were a lot of other Bitcoiners that had a similar interest, that really were passionate about similar things, that about health, about fitness, about whatever. I think part of that crossover is coin sorts. I think it does two things. One, if everything I thought about money was wrong, I wonder what else I was wrong about, right? It poses that question of like, well, if I was wrong about money, could I have been wrong about the right diet? Could I have been wrong about that you're going to hurt your back if you lift weights or whatever, right? So there's kind of a sorting there. More so than that, and I've come to this view more recently, that the power of Bitcoin is it sorts for a group of people who were able and are able to hold a contrarian view, to be supporters of something that everyone else is telling you you're wrong, or most people are telling you you're wrong, and to hold that view for years and bet your money on it, usually a lot of money. That's a very specific type of person who can do that. And so Bitcoin inherently filters for that type of people. And then it like hyper networks them together into like a digital collective or a digital group. And that's very powerful. And like I said, it sorts for a certain sort of person, not just the person that can kind of stand in their own two shoes and have their own thought about something, but also all the other things that correlate with that. What I discovered is in many times a lot of it like health and fitness and other things. And so it became, I think, a lot of fun, just a lot of fun of saying, hey, while we're all working every day to try to drive Bitcoin adoption and to try to make this thing grow and make it happen, we're also there's other interests that we share, and it's more fun and it's more interesting. For a while, I would really only talk about that stuff when Bitcoin was down to sideways. So when Bitcoin was up, there was always exciting news about Bitcoin, and I would talk about Bitcoin. And then when it was sideways, instead of getting into fights and like yelling at people, I would just talk about weightlifting or talk about other interests. And that was a hell of a lot better than the wars that go on.
I know, and I ask you because so many people in the space are sometimes hesitant to post and share about anything that's not that, myself included, right? Like I've had that where it's like, should I post this? It's not really related to Bitcoin, but I kind of feel like I should do it. And you just have this sort of the two wolves inside of you tell you or convince you not to, right? And I think you've done it in such a great way, and it invites. It lets people know more about the person behind the Bitcoiner, right? Like you feel like you know these people, right? Or you're really getting to know them. I've saved my most hard-hitting question for the end. And you're a person that probably walks 1 million steps in 40 days. And that's roughly the math that I've done. I've been dying to know this, but what is your favorite brand of shoes?
Yeah. So I always loved, Field Grounds. I did Field Grounds for a while. So it's a wide toe box. It's a zero drop. So I'm a big fan of a wide toe box and zero drop. A lot of shoes, they're not foot shaped. You don't want the heel elevation. But if you need a little, they're very thin though. If you need a little more cushioning, which I have at times because I walk so much, it's mostly on asphalt. There are times where I've needed a little more insulation. Ultra Running has a wide toe box, generally zero drop shoes that are there's a little more insulation. And so if you're a runner, that's important, or even just if you need it for walking. But so Field Grounds and Ultra Running are my two fans. But my cobbler has been giving me some input on the shoes. So I'm running everything by my cobbler now.
There you have it, man. I'm gonna go out and get me some Field Grounds. Man, this was so much fun. Thank you so much for coming on. I'm really keeping an eye out on you guys in Nakamoto, and can't wait to see what you guys do. And can't wait to your next conference in Vegas. I'm sure you're going to be there. We're going to be there next year. Hell yes. Where can people find you? Where can people learn more about Nakamoto, Steve, everything you're doing?
Yeah, so in the spirit of this episode, we're on X, we're on Twitter. Just look up my name, I'll come up. Look up Nakamoto, David Bailey. Follow us on there, and obviously we'll be posting a lot and sharing a lot of updates there. It's really the early days. So we completed the merger last Friday, and that was basically the starting gun. And you'll be hearing a lot more from us and kind of get going and build this thing. And I think it's exciting. I think the timing is really good. And I mean, we did a nice break to not talk about macro. But one of the things obviously that happened today is that Powell signified that he's getting ready to cut interest rates. And this is really a big decision that I think it wouldn't surprise me to look back and be like, this last year wasn't really a bull market. The bull market didn't start till now or the next couple months. I really think we're looking at a sort of ignition there, that it was obviously a great market. It was a very positive market, but I'm not sure that really was. I wouldn't surprise me at all if it turned out that wasn't really the bull market. We're actually looking at that landscape in front of us today. And so there's a lot of kind of, I think, macro forces that lend to that. So we'll see. But it's good timing. It's an exciting time, I think, to be in the market with what we're doing and scale this strategy. And much more likely than not, I think we'll end up finding that the timing was really excellent.
I can't wait, man. I'm definitely watching you guys without blinking, and I'm excited to see where this goes. I do believe they're going to cut, well, TBD, but I agree with you. I think whether it triggers now or next, I think we all know where we're going and up and to the right. And if you stick to the right thesis, the right teams, and the right investments, you're going to be along for the ride with all of us. So I'm looking forward to seeing you soon in person, man. And I want to have you on probably next year or next season to see where Nakamoto and Bitcoin have done.
Definitely. Let's do it. I'm looking forward to it. Thank you for having me on, Mauricio, and always a pleasure.
Man, I love chatting with Steve. And regardless of how you feel about Bitcoin treasury companies, they have had an undeniable impact on Bitcoin's market structure, and they will likely continue to do so. In the end, buying Bitcoin with excess cash, in my opinion, is just good cash management discipline. As the erosion in the value of cash over time becomes more and more acute, companies everywhere will be forced to consider new cash management techniques, and many of them will inevitably be forced to buy or hold Bitcoin or other assets instead of just holding cash or government debt. In other words, in a long enough time frame, many companies will become what we think of today as Bitcoin treasury companies. I hope the episode today helped you get a better understanding of Bitcoin treasury companies and how they interplay with Bitcoin spot markets. I would love to hear your questions and comments on this topic, so feel free to reach out to me via email or write to me on X to keep this conversation going. We will be back very soon, once again, with another amazing guest. Thank you for listening, guys. See you soon. If you enjoyed this Because of Bitcoin episode, I would be very grateful for the 5 seconds it would take you to drop us a review and give us a rating on your favorite podcasting platform. This will really help us reach even more listeners. And if you'd like to learn more about Bitcoin, be sure to check out our newsletter by subscribing at ledn.io. That's ledn.io. Again, this was Mauricio Di Bartolomeo. Stay tuned for our next episode. And until then, muchas gracias y los quiero mucho. Ciao, ciao.